Hey there, everybody. My name is Allison Ostrander, and I am the Director of Risk Tolerance here at Simpler Trading. In today's video, I want to talk with y'all about Zillow. Now, Zillow's been on my watch list because I like the overall daily chart setup here. We have a great squeeze. We had a recent true low, which can usually identify a good buy-in spot before a run higher. We have a bullish signal that is still valid on the compound breakout tool. We have momentum building up from the zero line with plenty of room to continue to the top of the axis. And so even though this has started to move to the upside, there is still energy within the squeeze to keep it going. Now, the reason why I personally was struggling a little bit about necessarily jumping into this is I missed the bullish divergent bar entry on Friday. That would have been, for me, the ideal spot to try and at least play up towards 50. But then when I saw this again yesterday and was keeping an eye on it, I noticed 50 is not really the level I wanted to get in at. And the reason why is because of the weekly chart. The weekly chart, we have the 100 period simple here. And we were basically in a wedge pattern. And as of today, at least, it looks like we are attempting to break out of this wedge pattern to the upside. Notice that there's also a weekly squeeze. We're attempting a bullish signal on the compound breakout tool here. And we have bullish sentiment on momentum. So you could look at considering opening this trade tomorrow, or you could wait until Friday just to confirm that the underlying price is staying above the 100 period simple. Basically, it's staying above the $50 price level, and it's trying to hold that as support. But the trade idea that I would like to consider here is something either along the lines of a long call or a calendar spread. So I would definitely go out and give myself time due to the weekly squeeze, something like the August monthly expiration. That's 52 days out from now. It's also past what the anticipated earnings date is, which on Thinkorswim, they're anticipating it to be August 3rd. Same thing with Tastyworks. It doesn't look like that date is confirmed just yet, but as you can tell, we give ourselves a little bit of a cushion there to help protect us a bit more from theta decay if we decide to hold it longer term into the announcement, right? We get a little bit better protection of option premium here. We also have the possibility to maybe start getting a run up into earnings due to these daily and potentially the weekly squeeze attempting to fire to the upside. So all of that I like for that possibility. And if you wanted to jump into something like a long out of the money call, the 55 strike certainly doesn't look too bad from a risk perspective at 210. And of course gives us room to play into or above that strike level if we can get these squeezes to continue to fire to the upside. However, I will recognize, right, it is a bit far away on the daily chart, that 55 level. And so if this is a little bit of a higher risk compared to what you'd want to see, one way to help manage that risk and reduce it, but still keeping the long-term bullish narrative, is by creating a calendar spread and going out to something like the July 14th expiration and selling to open the 155 strike. By doing this, you take your risk from about $2.10 to $1.66. So it definitely reduces a chunk of that capital. But at the same time, it still keeps the bullish narrative with the idea that by July 14th, we'll ideally continue to trend higher, but we may not get all the way up to $55. If that happens, we still get to benefit from the theta decay on the short strike while our long strike continues to increase in value as it gets closer to at the money. And of course, given how much time we have on this long strike, you could always consider rolling out your short strike. If we get, let's say, up to $53 by July 14th, everything's still looking bullish, the squeezes are still in the process of firing, then you could always look to move out that strike. And if you wanted to still either do a calendar or bump up the short strike and turn it into a diagonal. That way you give yourself a little bit more of a buffer short term into that $55 price level if we're trading close to it, and still be able to take advantage maybe of the theta decay on the short strike. And certainly one trader here who does a lot of diagonal and calendar work, if that's something that you're interested in for income growth with your trading, is Mr. Bruce Marshall. He is one of the traders here at Simpler Trading, and he will actually be doing a free webinar tomorrow night talking about how he has sustained growth throughout the years here with his trading. So he is a great trader overall. He is definitely great for income style trading. He does this, right, to make money for him and his family, to support himself. And he has had consistent gains throughout the years. So if that's something that you've maybe struggled with and are looking for, certainly feel free to check out his webinar tomorrow night.